Billions of dollars change hands in the crypto markets every single day, and the penalty for holding the wrong asset is absolute. Look at this line chart. It tracks a specific token called MyNeighborAlice, ticker Alice, which topped out above $42 back in March 2021. Today, it trades at roughly 10 cents. That is a 99.75% contraction from peak to trough. Yet, despite that devastating loss of value, Alice hasn't been delisted. It is still live and actively trading right now on top-tier exchanges like Binance and Coinbase. This creates a difficult choice. You have to decide if this price level represents a rare entry point for an eventual recovery, or if the project is simply bleeding out its remaining liquidity. To figure that out, we have to ignore the price chart for a minute and look at the actual digital product underpinning the token. MyNeighborAlice is a digital metaverse and crafting game. Players purchase plots of land, build virtual islands, and interact with neighbors. The architecture here is split across two chains. The Alice token itself runs on the Ethereum blockchain, while the actual gameplay engine operates over on Chromia. The token serves a strict utility purpose. If a player wants to build an island, buy cosmetics, or craft in-game NFTs, they have to spend Alice to do it. People are still actively logging in and spending the currency. That active daily utility proves you are dealing with a functional, live product, rather than abandoned vaporware. The game functions, but the financial mechanics tell a different story. The total market cap sits right around $10.5 million. In crypto, your investment value is heavily dictated by circulating supply. When developers unlock new tokens and flood the market, retail investors absorb the losses. This pie chart illustrates Alice's absolute strongest metric. The supply is over 99 million tokens, and every single one is already in circulation. Compare that to a typical project, where early investors might dump millions of newly unlocked tokens on your head next month. Zero future dilution means you face zero surprise developer dumps. That mathematical reality creates an organic price floor. But an organic floor does not guarantee upward mobility, and Alice has a major structural limitation working against it. Many protocols implement a burn mechanism, a smart contract that permanently destroys tokens over time. This artificially increases scarcity, which can drive up the price of the remaining tokens. Alice has no burn mechanism whatsoever. That 99 million token float isn't getting any smaller. Because the supply is entirely fixed, the price can only go up if the protocol attracts a massive influx of retail buyers or game players. Having no dilution risk is great for preserving capital, but without a demand catalyst to chew through the existing supply, price action stagnates. That stagnation is exactly what retail traders are staring at right now on the immediate technical time frame. This candlestick chart isolates the critical zone. The 10-cent mark has established itself as a distinct, hard horizontal support floor, but the momentum behaves like a falling knife. Heavy bearish sentiment continues to push directly into that support line. If buyers defend this line, the math is straightforward. At a $10 million market cap, even a minor wave of volume can create massive theoretical multipliers for anyone catching the bounce. That makes the 10-cent zone a highly volatile binary trigger. It either holds and bounces hard, or it fractures and drops into true price discovery. To calculate the odds of that bounce, you have to factor in the broader external market conditions. Back in 2021, the play-to-earn gaming sector was pulling in billions. Today, that entire category has collapsed under the weight of broken economies and abandoned player bases. Alice is firmly categorized as a legacy token, which means it is trapped within that struggling, outdated narrative. Right now, venture capital and retail liquidity are flowing directly into brand new 2024 gaming infrastructure. They are actively ignoring the stagnant assets left over from the last cycle. While the internal tokenomics are stable, the macro market remains a significant obstacle. A successful outcome here requires investors to abandon their current focus and return to a 2021-era gaming narrative. With the macro headwinds clear, let's map out exactly who this trade makes sense for. If you are a momentum trader looking for immediate chart strength, high volume, and quick flips, avoid this entirely. The trend is actively hostile to your strategy. This quadrant chart maps risk tolerance against time horizon to identify bottom fishers, traders hunting maximum value discounts. Alice belongs squarely in the top right corner, requiring extreme high risk tolerance and a very long time horizon to wait for a sector rotation. You don't add this to a standard portfolio for stability. You allocate to it as a specialized binary risk play. Here is the honest reality check. Alice is a legacy gaming token trading at a steep discount. A fully circulating supply prevents dilution, but it does not guarantee a revival story. If you have the risk appetite for it, keep your eyes locked on that 10-cent support line. That is where the battle will be decided. If you plan to execute, the token is highly accessible. You can trade Alice on Binance and also Coinbase, or swap it over on Uniswap. If this breakdown gave you clarity, hit the like button and subscribe. Drop a comment below and let me know if you are bullish or bearish on Alice at these prices. Finally, remember that this is not financial advice. I lay out the mechanics, but you always have to do your own research before putting your capital on the line.